Hi, everyone. Thanks for showing up. I'm Debbie Schwartz, founder of Road2College and the Paying for College 101 group. And I'm here tonight with Chris Abkarians of Juno. He's one of the co-founders. Let me just do a tiny bit of housekeeping. I'm going to spotlight Chris and myself just to answer questions. And so everybody who's here, this is actually a meeting as opposed to a webinar. And the reason why I share that, and it worked out really well, this is the second AMA or AMU, Ask Us Anything. So AUA, sorry, that Chris and I have done on loans. And the last time we did it, to tell you the truth, it worked out really nicely. You guys can ask any question. We will try and answer it to the best we can, or if we can't answer it, immediately, we'll probably, take it down and try and get to you later. But people, you can put your question in the chat, but you can also raise your hand virtually, and we will call on you, and you can unmute yourself and ask your question that way. And tell you the truth, that's what we did last time, and it worked out really nicely. We had like a nice free-flowing conversation. If people feel comfortable doing it that way, of course, you can also put your question in the chat, but just want to give you different options of how we can help tonight. So how about to start off, if you want to just put in the chat kind of what's going on, like have you done any research on loans? I'm assuming by now you've gotten the bill. When is your student going to college? If you want to share any of that, that would be really helpful.
Hi, can you hear me?
Yes, Cecilia?
Yes. Hi, I have a question.
Sure.
So my son got aid for his school year, and he also is able to request subsidized and unsubsidized loans. My question is, can he request for a subsidized loan even though he has grants and aid for the school year? The reason why I'm asking is because he needs equipment, which will include a laptop.
So I'm just curious, when you say request, did you get a financial aid, like form or letter that shared all the financial aid you were offered? And
Yes.
And was the subsidized loan in there, or you weren't even granted the subsidized loan?
No, we were it's offered. We can get subsidized and unsubsidized. Everything is paid for except for like parking and any equipment that he needs or books. So I don't know, are we able to request a subsidized loan even though he has grants to cover the cost between everything else he's going to need?
Maybe to make sure I understand the question correctly, are you saying that the grants that are offered by the school fully cover the cost of the whole cost of attendance?
Yes.
Okay. Look, in that case, then you might not need the loan at all. But yes, you could, as long as I want to be careful about how I'm answering this. So there's a cost of attendance number that is published by the school that includes tuition plus fees plus an allowance for basically rent and food and other living expenses. And that's usually a relatively large number. And
yes.
So if grants cover all of that, then you wouldn't be able to use any loans. But if grants don't fully cover that, then you could use the subsidized loans still.
Okay. And when you say when I see all those costs, that's for the whole year, correct? It's not for just one term.
Correct. Some schools will break it out by term on the page, but the total amount, let's say the cost of attendance was, I'm going to make it up and say $50,000 for the year. $25,000 is going to be for each term. Yeah, it's if you, for example, if you're going to borrow any money, you'd be able to borrow up to that $25,000 per term. But if grants cover the full $25,000, then the school wouldn't let you borrow above that.
Okay, so I need to see the total amount for the year that the grants are going to cover minus the amount of cost of attendance. And if there's a gap or a difference, then I can request a loan for that amount or less.
So whatever that gap is, you can use the subsidized loan. Is it your son's first year of school?
Yes.
Okay. So then your son would be able to use up to, there's a number that you've probably been given on how much subsidized loans you've been offered. The maximum is $3,500 for the first year.
Yes.
So yes, you first would use that $3,500. That's the subsidized Stafford loan. And then after that, if you need more money, you can get another $2,000 in unsubsidized Stafford loans, which should also already be in the financial aid package. And then if you need more money than that $5,500 total, that's when your two options are either to use a Parent Plus loan, which doesn't have a limit to how much you can borrow and is also from the federal government, or to use a private loan if you're getting quoted a rate that is better than what a Parent Plus loan would offer.
Okay, and then for example, if on paper it looks like he got the 2 grants, and so if I request a subsidized loan for equipment, the school automatically take the grants first to cover his cost before the loan, correct?
They should.
Okay.
Yeah.
And then anything remainder goes to my son?
It would, so the money will go to the school first. And
Right.
if there's an amount that's left over, then yes, then he'd be able to transfer it to his own account.
Okay.
And ask the school how they do that, because every school does that slightly differently, how they kind of process the extra money.
Okay. Have you ever heard of parents doing that, taking out subsidized loans for equipment such as laptops?
So that's typically included in the cost of attendance budget.
Mm-hmm.
So, and some schools will only let you use that for the first year, for example. But yes, that's one of the valid reasons to use the subsidized or any of the loans to help pay for stuff.
Okay. Okay, perfect. Okay, thank you for answering my question. I appreciate it.
No
Sure.
problem.
Okay.
So we've got a lot of questions in the chat, so I'm going to go to a question in the chat.
Yeah.
But if you want to ask a question, if you don't mind, I think there's like a feature about raising your hand. I don't know if you guys can see that. It might be in the 3 dots on your profile. But well, the first question is, I just found out that private student loans cannot be used to pay for housing and food if the student moves off campus. Is that correct?
That is not correct.
I feel we should play like a game, you know, like correct answer, not correct. That's not correct, unfortunately.
So to provide a little context there, the amount that you're allowed to borrow is, so we're talking for undergrad. If the cost of attendance number that a school publishes includes some estimate for what it costs to live at that school or around that school, plus what it costs to eat and do other things. And it doesn't matter if you're living on campus or off campus, you can still get a loan to cover that. Now, the one wrinkle here is typically that budget the school comes up, the maximum amount that you're allowed to borrow is that cost of attendance. We can talk about some more nuances later. But typically that cost of attendance number is based off of what is dorms or on-campus housing if the school offers it, or otherwise some of the cheaper housing that is available. And so if you choose to live in a place off campus that is more expensive than what the school has put into the cost of attendance number, you can't increase the cost of attendance to match that higher living expense. But the number that gets published in the school's financial aid website is really the cap on what you can borrow through either Parent Plus or a private loan. And it's up to you to decide how to use that after tuition and mandatory fees get paid.
Okay.
If I could actually just, I'm sorry, I'm the one who asked the question.
Go
Just
ahead.
for some further clarity, because I called Ernest, who I have a student loan through for my daughter who's older. The question was about my son who's about to be a junior at college. And the way they explained it is they said that if I'm paying for an off-campus apartment that I'm paying, the apartment company for, they said that when they disperse the funds, and I remember this from my daughter, they disperse it directly to the school. So they're only going to give the school what they say we need. So if the tuition is, let's just say for round numbers, $10,000, and I need another $5,000 for the off-campus apartment, how do I get my hands on that extra $5,000 if they're only going to send the school $10,000?
So great question. So the amount that you borrow in your application is, from any lender's perspective, that number comes from you. And so in your application, you can put 15 instead of 10, as long as 15 is less than the cost of attendance that the school publishes. So maybe to...
So that's the max. I don't know. I guess maybe the piece of information that might be missing here is your daughter's off-campus housing more expensive than what the school is allocating.
No, it's actually going to be less expensive.
Okay, then you should be okay.
So the money will just ultimately go to the school first, and then you'll be able to, when they subtract out the tuition and fees, that extra amount that's left over then can get transferred to your daughter's account, and you can use it either on the school's housing or other housing. And so that's the key wrinkle here. The money always, whether it's a federal loan or a private loan, has to go to the school first before you can then get it.
Okay, so I should probably also make a phone call to someone in the school's bursar and have this dialogue with them too, to just confirm, I
Correct.
guess, how that would
Yes.
work, how I would then get that money for the housing from them.
Yes.
Correct.
Okay, thank you very much.
Sure
Okay,
thing.
no problem. Okay, let's ask one more question off the chat, and then we'll go to somebody has their hand raised. But the question on chat is, I have two children in college. One has has $9,000 a semester, and my daughter is $11,000 a year. I'm assuming that might be their cost. The parent has $70,000 in student loans and works in the government, and they are hoping to get their student loans forgiven. They have very good credit, and they want to be able to take out loans for both of their students. Are they able to take out a Parent Plus loan, or should they be taking out Sally Mae?
It's a good question, and it's a little bit, it's not a straightforward answer or rule to follow here. I'd say in this situation, personally, I would get a sense for what the rate I'm being offered on a private loan is and compare that to the Parent Plus rate. And if I'm going to save a material amount of money, then it would make sense to use the private loan instead. Now, just for a little bit of context there, the Parent Plus loan will be a little bit over 9% on the rate plus 4% origination fee. That works out to roughly a 10% APR. And APR is the number that you're going to see quoted by private lenders when you typically go to their sites and check your rates. And so that's probably the best number to compare against. And we have a calculator on our site as well. I'll drop a link in the chat in just a few minutes where you can at least use that to compare and see on an apples to apples basis when you're comparing that Parent Plus option to any private loan option, whether it's Sallie Mae or somewhere else, what the difference in total cost would be.
Can I just add a little bit to that? You mentioned, and I don't know whoever this person is, if you want to unmute and answer the question, that you work in the government. And so I'm assuming that you're going to get your loans forgiven through PSLF. Is that true? Or how are you getting your loans forgiven?
Yes, it would be through the public servant loan forgiveness.
And
Whatever.
how far are you into it? I'm just kind of curious.
Probably like 4 or 5 years.
Okay, so one other thing you might want to consider and look into, and we have somebody on our, if you want to have a conversation about, is if you are willing to stay in your job for maybe, it would have to be 10 more years, you could get, and you take the Parent Plus loan, you could get your students' funds or loans that you borrow for them also forgiven.
Okay, that's a good option. It
So-
sounds like crazy to even do more loans, but my daughter's tuition is 57K and they gave her 48K, but with the labs and fees for the medical program, it went up to 11. And then my son he got a half scholarship, so his comes out to 9K, which I'm gonna try to appeal it to get a little bit more off, and then see if he can do work study. She's just starting and he has 3 semesters left. So he did the community college route the first 2 years because of COVID. And then now he's in the last 2 years of FDU. So I don't know.
So if you want to send me an email at support@road2college.com, I can connect you with somebody who can just help you understand whether or not you can get your students' loans forgiven if you continue.
Okay.
And then you should use that information and then compare that to the private option and make a decision. I mean, the bigger decision is, are you going to be working there for 10 more years?
Oh yeah, I am.
Okay.
Definitely am. And then is this Sally Mae or anybody else, are those loans that you have to start paying now?
For private loans, there's typically 4 repayment options, and one of them typically allows you to delay making payments until either 6 or 9 months after the student graduates.
Okay.
But just
Thanks,
know,
Juno.
and this is for everybody here, and you can make those choices, but you will be offered different interest rates based on the choices you make for repayment. So if you defer repayment, and again, it's perfectly fine depending on your situation, they will probably offer you a higher interest rate than if you say, I'm going to start to repay immediately. So there's a trade-off there.
Okay, thank you.
Okay, how about Diego? You raised your hand. Do you want to unmute and ask your question? Okay, well, Diego, whenever you want to unmute, just let us know. We're going to go on to the next question.
Oh, there I am. Sorry, I thought I was unmuted, but apparently it wasn't.
Okay, no problem.
Good evening. Hey, you guys hear me?
Yep.
Wonderful. Okay, so I had 2 questions. The first one was, does signing a promissory note statement automatically bind you to any type of loan?
Sorry, I couldn't.
What are you signing? Say it again.
I believe it is called a promissory note.
Oh, a
statement.
promissory note?
Oh, correct.
Okay. Chris, you want to maybe even explain what a promissory note is?
Sure. So when you are applying for, so once you filled out FAFSA and you become eligible for, you have to fill out FAFSA to become eligible for any of the federal student loan programs. And then to claim your federal student loan, part of the process involves signing a document that effectively says that you're going to use this thing. And part of that is called the master promissory note, which is typically accessible by logging into your federal student aid account. And you can go through a couple of steps there to select the loans that you choose that you want to use for the upcoming year.
So I think the question was, does it bind him?
I apologize.
Got it.
I
Sorry.
apologize, but for some reason I disconnected out of the meeting. And I only heard the last sentence you said.
I was just explaining what the master promissory note is, but to answer your question specifically, it does not technically bind you. So once you sign it, then effectively what's happening is the school is planning on receiving the funds that you've accepted once you've signed that master promissory note. They kind of assume that they're going to get that money sent to them by the federal government on the tuition due date. And if you change your mind and you say, I no longer want this, you can still do that. And if you get those funds and you decide that you don't actually need them, or you need less of them, then you can still pay that loan off early. There's no prepayment penalty. And so you do have a lot of optionality. Now, the one downside is that there is an origination fee that's associated with federal loans. That origination fee is charged when the money is sent to the school. And so I would recommend that if you decide that you don't want the money, or you think you might need less, it could be beneficial to let the financial aid office know that you no longer want, for example, a Parent Plus loan before that money gets sent to the school.
Okay.
Thank you for answering the question.
Sure thing.
The second question was that in my case, for example, financial aid package, including to federal loans. And from my understanding, the financial aid package covered my costs for this year, and currently I have a credit on my tuition balance. So my question is, currently would I be owing anything to the federal government in loans, or do I only owe the federal government money if I accept or activate the funds to go towards my tuition?
I'm sorry, I'm having a little bit of trouble hearing. Debbie, I'm not sure if you did.
I'm not sure I heard the full question. I don't know if you could repeat it again and maybe get a little
That's all
close.
right.
Do you mind maybe typing it in the
Can
chat?
you hear me?
Make sure that we get to it.
Sure, no worries. I can do it.
I appreciate it. Thank you. Sorry.
Okay. How about Hootie? Do you want to unmute yourself?
Okay, here we go. Can you hear me?
Yes.
Yes.
Okay, so I have two going. One's a transfer student. Another one is a true freshman. My wife is, I guess we're kind of splitting them. I mean, we're together, but we're kind of splitting them. So as far as like the loans and stuff, so she did apply for the Parent Plus, and I guess it's not denied, but they asked for an endorser. So I endorsed it, and it said it went through, like it was all good, but I'm not seeing like, I don't know, like a receipt or anything that says, okay, now you're good. You have this loan amount and you're good to go. And the college that it's going to is not quite showing anything because they're keeping his financial aid and scholarship stuff like in a hold status until after orientation, which is driving me crazy because he's going out of state. So I just, I don't know. I don't feel like, I mean, I guess it went through, but I don't want them to get down there and then, it's a problem. So I guess what I'm saying is, I guess what I'm asking is there a definite response or receipt that comes back that says, yes, you've been approved for this amount and, you're good to go? Or what does it look like?
Maybe just two quick questions. Did you sign something called an endorser addendum? And do you happen to have a copy of it?
Well, I'm assuming that the endorser addendum is the main thing that I went to sign. I mean, unless there was other things to sign, in other words. So I went in and signed something as the endorser, and it said, thank you, and, you were good to go. I'm pretty sure I have a copy.
Okay. And
let me.
Has your wife checked her FSA account to see if?
Yeah. Yeah, and I think I'm getting it mixed up, like which messages came to what, because I was kind of like working hers for her too. So, but I'm pretty sure that she got a note saying that it was good, that we were good. I'm sorry.
No worries.
I don't have any,
Sure.
like, I don't know. It just was weird, but I signed it, and I'm pretty sure we both got emails saying, you're good. Like,
I would recommend logging into her FSA account and checking within the dashboard to see that there is an eligible Parent Plus loan there. If that is what we're talking about here.
okay.
That's the first thing I would check. And if it's clear based on logging into her dashboard and checking that, then I would recommend kind of like maybe bugging the financial aid office about this a little bit, because this is one of the, I'd say, slightly more nuanced things that they deal with, but they deal with it often enough. And so they should be able to tell you if there is a planned disbursement for on your behalf to their school to pay for the upcoming semester.
I didn't receive a financial aid letter, Debbie. I don't know, like, no, we haven't received any letters.
Oh, what I was typing a question or a response back to somebody else.
Oh, okay. Sorry.
That's okay.
Okay, thank you. I'm gonna have her look now and see if we can resolve it. Thank you, though.
Okay. Okay, let's ask a question in the chat, and then I'll go to a person after that who's raised their hand. But the question in the chat is, what are the loan options for a student who doesn't have established credit and a parent who doesn't have the best credit?
Good question. So this is in this scenario, I'd say federal loans are going to be helpful, and regardless of what the student's credit is, and there are some exceptions to this, but they should still be able to get access to the either unsubsidized or subsidized Stafford loan. And so this is a loan that is offered by the federal government. As long as you fill out FAFSA for the first year of school, the student can borrow $5,500 in their own name to help pay for school. And the amount that you can borrow increases a little bit each year for the second, third, and fourth year of school. The federal government realizes that most 18-year-olds or first-year college students do not have credit history or even any credit score at all. And so that's not really a criterion that's looked at deciding if the student is eligible. So there you should be good to go as long as you've filled out FAFSA and you follow through on your FSA dashboard and sign a master promissory note. For the amount that you need above that $5,500 for the first year of school, that's where the Parent Plus loan comes in play. There are some cases where you can be denied access to a Parent Plus loan, but there's really two things that you can do. So if you've been denied access to Parent Plus, either like we just spoke about, you can get an endorser. And an endorser is effectively like a cosigner. This is how the federal government defines it. And if you have somebody else who is willing to endorse it, then you can get access to the full amount of funds that a Parent Plus loan lets you get, which is all the way up to the cost of attendance. If you don't have an endorser and you're denied for a Parent Plus loan, there's one more thing you can do, which is to request that the student is classified as basically the student can then be allowed to borrow a little bit more money through the Stafford loan program. So instead of $5,500, they can borrow up to $9,500 for the first year, if I'm not mistaken. And if you kind of find yourself in that position, one of the easiest things to do would be to just email the school's financial aid office, let them know, one, I've been denied access to Parent Plus, and two, can you help my student be classified as an independent student for the purpose of borrowing Stafford loans?
I would just get started on doing that pretty quickly so that you know what your situation is. Again, I'm just looking, it's August 8th. I assume that these bills are due somewhat soon. So, and as you can hear from all these questions, the financial aid office is going to get very busy. So I would at least apply for the Parent Plus loan and just know what your situation is if you have to take additional steps. Okay, how about Dan? Do you want to unmute yourself and ask your question?
Hello?
Yeah, hi.
Hi, how you doing?
Good.
I have a bunch, so I'll try to go fast. And like you said, our bills actually due Monday.
Oh,
So if she was offered a unsubsidized federal loan, but the question I have is if we choose not to take that loan, does that affect future years as far as the ability to get a similar loan, or is each year like a totally independent year as far as like FAFSA and eligibility?
Two ways to answer that question. One is if you're offered unsubsidized right now and you don't use it, you don't get to catch up next year. And so it's use it or lose it within each year. And then the second answer is you do have to fill out FAFSA again each year, and your eligibility for unsubsidized loans can change from one year to the next.
not
But each year,
Sorry, for
Oh,
subsidized.
sorry. Yeah. So unsubsidized loans, as long as you fill out the FAFSA every year, your student will have access to the full amount of unsubsidized loans.
and so it doesn't change if I didn't take one this year versus next year. It's the same potential eligibility.
The
And
only,
each year
the only-
is completely separate loans?
yes,
is
each
each
year
year
is separate loan. The only quote eligibility to getting access to the unsubsidized loan is just to fill out the FAFSA. Like that's the only thing you need to do. And there's no income requirements. I mean, you could have $1 million and fill out the FAFSA and your child will get access to the unsubsidized loans.
And it's in their name,
Yes.
that one. Does there any credit benefit to them to having loans in their name at this point?
Being paid off.
Yeah. If they're good at paying them off, that's the benefit.
Because the other question was if it was private loans or loans beyond that loan, a cosign loan with us that's in their name versus just purely a parent loan, does it make a difference in either rates or their credit? Like what's the benefit?
A private cosign loan would show up on both of your credit reports. And so again, if you're paying these off on time, then it can be beneficial to credit. The main difference between the Parent Plus and the private loans is that the Parent Plus is only in your name. Everybody gets the same rate for Parent Plus as long as you qualify. But yes, depending on your underlying credit and income, you might qualify for private rates that are different or lower than the Parent Plus rate.
But the Parent Plus, so that's a federally sanctioned loan,
Correct.
similar to Stafford. Is it through Sally Mae though, or is it through the federal government?
Through the federal government. So Sally Mae is no longer associated with the federal government. It's
That's
a
private company, yeah.
That's a private company. So
Mhm.
for the Parent Plus, are you applying through the FAFSA process?
Correct.
Yes,
But you would have had to been offered that option, or can you go back into the form and look for it? I don't remember, because the only thing she was offered was the Stafford loan. I don't remember seeing anything about.
you're not necessarily offered Parent Plus, it's just anybody can use it as long as you fill out the FAFSA.
But it's through the parent, not the FAFSA portal, where you filled out for FAFSA.
It would be in your parent, yeah, because now both the parent and the student have to create.
Yeah, but that's how you get back to that loan application process, is through the FAFSA form.
Correct.
Okay.
The dashboard would say login.
And between the Stafford and the Parent Plus, are they locked rates? Like, are those defined rates for the year? And would you know what they are?
They're for the life of the loan.
But is it individualized to you, or is it like a fixed rate? Like right now, everybody's going to get the same rate.
Everybody gets the same rate.
Everybody
Do
gets.
you know what? Did you know what they are?
Right now, so for any loan that is used for this school year, it's 0.08% plus 4.2% origination fee.
That's the Parent Plus. That's what Chris was explaining earlier. So if you kind of do the math on that, it's the equivalent to like about a 10% interest rate on the Parent Plus loan.
Which is pretty terrible.
Yeah, yeah.
And what was the Stafford? Do you know?
It is, hold on one second.
I know, I always forget that one. I mean, I kind of.
I will get back to you on that in just 1 second. I don't know why it's.
But you said Parent Plus was what? Plus 4%?
9.08 plus 4%.
Here, the Stafford loans are 5.5%. Oops, sorry. No, that was last year's.
Yeah.
Sorry.
The federal government site is still quoting last year's numbers. So
Wow.
this year should be about 1% higher than that.
Yeah, because I'm toying with, is it worth it? Or just trying to pay it outright and not deal with the interest. But in 2 years, I'll have a second child in college, so it's going to make more of a difference if we're going to have those options.
So something to think about, and just to kind of reiterate what Chris said, if you don't take it this year, you won't have access to this year's amount again. And kind of like, so and I don't know if it's possible if you want to kind of think out like the next, it sounds like 6 years, with both kids in college and what you might need. You might want to take it this year, and then if things work out, you can always prepay it. But this way you've had it, and then, it might give you flexibility in later years.
Because you're just basically starting from scratch each year if you don't take it.
Right.
Yeah.
And you only get access to the dollar amount that's available for that year.
And the Parent Plus, the limit of the Parent Plus is up to your individual scenario, or is there like a government defined limit based on income, or?
The limit is based on the school's cost of attendance. So the
number is it? Okay.
For each year. And so assuming the school's price goes up a little bit year on year, the amount you can borrow through that goes up a little bit year on year as well. And then the interest rate on the Stafford loan, the one that's in the student's name, is 6.53% this year.
And because school's starting shortly. If I went through the process and didn't get the loan approved until after the school started and I already paid, do they pay the school directly or they pay me? And then would I just get like refunded what I paid because they're paying for that amount?
They would pay the school directly. And so each school handles what you're describing slightly differently. I would recommend reaching out to the financial aid office directly and asking them exactly how they would treat a scenario where you don't have a balance, but you later borrow loans that are up to your cost of attendance limit or below it. The way I've traditionally seen it work is kind of as you described, where the school would then effectively the money that you borrow would, because you no longer owe a balance, sits in kind of a little account that the school has for you in many schools, and then you can transfer that back to yourself. But regardless of whether it's a private loan or a federal loan, all loans go to the school first.
And you've heard the scenario where people get their loans approved after the semester started?
Yes.
That's not unusual? Okay.
It's not as common, but it does happen.
Yeah, I just was kind of at the last minute thinking through this, and
Sure.
it's our first child doing this, so.
Mm-hmm.
It's more complicated than it needs to be. We're here to help if you have any questions along the way.
Okay.
I think that was it for now. Thank you.
Okay. Good luck.
Thanks.
Here's a question from the chat. My son's school is very behind in posting financial aid. It finally posted, but no loans are listed. However, his FAFSA site showed that he's eligible. Is it possible the school has yet to post it, or since the school offered need-based aid, does he not qualify for the subsidized loans?
I think there's an important follow-up question here, which is the need-based aid that the student was provided, does that cover the full cost of attendance? Because if it does, then that would explain why the school didn't include loans on the financial aid award letter. If the need-based aid covers the full cost of attendance number, you're no longer eligible to take out loans.
Okay, good point. Okay, how about Shelley? Do you want to lower your or unmute yourself?
Hi, thank you so much for taking my question. I'm a public school teacher, and so my question is, if I take out the Parent Plus loan, does the forgiveness start when I take out the loan or after my child would graduate? I paid for all of my education, so like my loans are all paid for, but if I take out the Parent Plus loan for my son and I work another 10 years, does it start, would I really need to work 14 years?
I'm not that familiar with the program, so it's a great question. I don't know. I don't know if you know, Chris. And if neither of us knows, I have somebody who's very familiar and I could follow up with them.
I have a set of notes on this because we were recently talking to somebody about it. I don't remember the exact answer, and so I don't want to give the wrong answer right now. So maybe I'll table this one for right now and go back and look through.
Okay.
Yeah, Shelley, if you don't mind, if you want to send me email at support@road2college.com, I could quickly get it answered, but also I don't want to provide the wrong answer. I have a gut feeling, but I don't want to say because I'm not 100% sure.
Can you put your email just in the chat so I don't screw it up when I send it?
Sure.
And then I just wanted to thank you. That was my question, just because I need to I'm trying to decide, do I take out a Stafford loan, or not a Stafford loan, a Parent Plus loan or a regular loan? The other question that I have for you, as having a child going into education, with this loan forgiveness program. My son is not, but my daughter will be going into education. Would it be best for doing a private loan and then co-signing? Because then if she gets a teaching job, then she would be eligible for the loan forgiveness after the 10 years.
I would be very careful to not take out a private loan in that case.
Yeah.
Only the federal loans can be forgiven in that scenario. Just in case that's helpful.
Okay.
So I just did a quick check, but again, I'll double check and we'll email you. I have a feeling that the 10 years might start after the school because it's 10 years of qualifying payments.
Okay.
But we'll double check.
Okay. And then, so you're saying I shouldn't have my daughter take out private loans. I should only have her take out the Stafford, and then I should do another Parent Plus loan as far as like the teaching forgiveness.
That I would say definitely yes to the first part.
Okay.
Then let's just double confirm what the exact process would be for having the Parent Plus loan forgiven under the public service loan forgiveness scenarios. I know there's at least one extra hoop to jump through in terms of consolidating the loan into an income contingent repayment plan and then being able to start the clock on forgiveness. But we'll double confirm what the exact mechanisms are there, because it's not as straightforward as getting public service loan forgiveness on a Stafford loan like your daughter would be able to.
Okay, excellent. Thank you so much for answering. Appreciate all of your help.
No problem. Okay, sorry, scrolling back to the questions in the chat. Yikes, we got a lot. That's okay. So somebody's saying we're still waiting on the final financial aid offer numbers. Should I continue to wait on applying for a Parent Plus loan? So this is Kat. I don't know if you're still on the line, Kat, or in the meeting.
Hi,
Hi.
I'm here.
So you haven't gotten anything from the school?
No. So they removed the like the temporary estimate offer. So you can't even see it now, but I went on a school financial aid, like kind of one-on-one, and they said they were going to publish it between, then and mid-August. So I'm just kind of stressed out because I feel like I'm waiting till the last minute, and this is my first rodeo. Like, it's our only child. So it's not like I'm very well versed in this whole situation.
What school is this?
Santa Cruz, UC Santa Cruz. You can call them and put them on blast.
They indicate when the tuition due date is.
Yeah.
I mean, school start, so move-in day is September 19th.
Oh, okay. So they got a little bit of time.
Yeah. But I don't feel like I have time to shop around or, whatnot. But we have a really high SAI number. So that's what's stressing me out as well. I'm like, is this going to change? Is this going to go up? Of course, I'm hoping it's going to go down, but I don't know about that.
All right. I'd say first off, good news. You don't need to necessarily be stressed yet. At least it looks like on their site, September 18th is the undergraduate tuition due date. And actually, that's plenty of time for shopping around or using a Parent Plus loan. Should the school have had things ready by now? Absolutely.
Yes. Yeah.
But I'd say don't worry so much right now, just because you will still have time for either for any private option and getting the money to the school on time or using a Parent Plus loan. Now, really, I'll just say that I can completely understand it's challenging to know what that number is going to be that you need to apply for until you actually know what it's going to cost. But this temporary solution to this is you can, let's say you're looking for Parent Plus, you can put a higher number right now that with a high degree of confidence covers what you think you need. And then ask the school to, what you basically email them and tell them to certify a lower amount and have that lower amount match really whatever you need it to be once you know what the final number is that you have to pay. You can do the same exact thing with any private lender. You could apply for right now, and before, well before September 18th, is if you know what number you actually need, you can tell the school to only certify the lower amount, or you can even change, depending on the lender, the amount that you want sent through their dashboards directly.
Okay, so you're saying it's okay to apply for a higher number, and then let's say we get approved, we shop around, and then they publish the true financial aid offer. What was the next step? Is it the school? Is it the lender?
It can be either. I'd say that maybe the simplest thing to do would be to email the school's financial aid office, tell them, please certify my loan for X dollars. And basically wherever you're getting a loan from, the school has to, there's a step called certification where the financial aid office confirms that the person is a student and that the amount they want to borrow is less than the cost of attendance. And so at that step, you can basically give the school instructions and say, hey, when it comes to this point, I want you to certify no more than this dollar amount. And the lenders are only allowed to send over the amount of money that gets certified. And so then the loan balance will match whatever you told the school to certify.
Okay, so they won't keep me liable for the original number that we applied for, is what you're saying, correct?
Correct.
And the origination fee is based on only the dollar amount that's dispersed, not the original loan application.
Correct. So,
okay,
and that really is going to the Parent Plus loan here.
and the funds are only payable to the school, or will that be a check to me and then I pay the school, or how does that work?
Yeah, good question. It always goes to the school first.
Okay.
They will subtract out tuition and mandatory fees for that term. And then the amount that's left over, you can wire to your personal account after.
And they will only pay for the term at a time, or will they pay for the whole year? Will they release funds for the whole year or by term?
By term.
Okay. Okay, cool. And then since I have you guys online, quick question, like GradGuard, which is insurance for in case like your child, I don't know, has to discontinue school. Does that affect loans, etc.? Do you guys have insight on that?
Tell me what you mean by effect. I mean, yeah.
Okay, so if they're only releasing funds, I guess it wouldn't really affect if they're only releasing funds by the term. Will the school hold you liable for the rest in case the student needs to pull out in case of emergency or whatnot?
If a student needs to pull out and it's after, there is a refund date that each school has of when you can, they will refund tuition. And if it's after that date, you are liable for the rest of the semester. And that's the purpose of GradGuard. It will cover your costs. You know, if your student has to pull out after the refund date.
Okay, got it. And how do you guys feel about GradGuard?
Very highly respected. Know them very well for a long time.
Agreed.
Okay, perfect. Okay, awesome. Thank you.
Okay. So Chris, do you want to, which we haven't really explained, because I think it relates to a lot of people's situations, do you want to explain a little bit about Juno and how people should like factor it into some of the decisions and things that we've been talking about today in terms of like getting loans?
Sure, happy to. So I think the best way to explain this is, where does Juno fall in your decision tree about how to pay for college? And so what I'd start off with is saying, once you have your financial aid award letter.
Sorry, do you want, and you want to, will you explain what Juno is?
Yes.
Okay.
So Juno started a little over 6 years ago as to negotiate better rates and terms from lenders as a group than what people can get on their own. And so I started it with some of my classmates actually 6 years ago to see if we bundled together hundreds of people who were going to school at the same time, could we get lenders to compete against one another, where we would then, let's say, select a winner who made us the best offer and then all go to the same place. And that concept or that experiment then worked really well. So we've been repeating it. And now for undergraduate students, we have an offer where we have a partner lender. You can check your rates on our site without impacting your credit. And if you like the rates you see on the site and you sign and use that loan to pay for school, then we're able to give you 2% cash back on the loan amount that you take out. If you find a better rate somewhere else, we're able to, from most lenders, we're able to match that lower rate and then increase your cash back to 3%. And so the purpose is to have you not trust us that we're helping you find the lowest private loan option that's out there if you're in the market for a private loan, but to create a structure where we encourage you to shop around and not necessarily trust the first thing you see. And if you find something better, the process for getting a rate match and getting your cash back is relatively simple. And we provide lots of one-on-one conversations with parents all throughout the year. So if there's any questions that you have or anything that we can help you with, regardless of whether you use Juno, please do feel free to reach out to us. And then thinking about when do private loans make sense versus when don't they is maybe just 20 seconds on this. When it comes to undergrad, the first place that most people would tell you to start is with the Stafford loan program that the student can take out in their own name. So there's two federal loans that you can use to pay for undergrad. There's first that Stafford loan that only allows you to borrow up to $5,500 for the first year of school. And then if you need more money than that, then you can use either the Parent Plus loan program, which is also from the federal government and accessible by completing FAFSA, or you can use a private loan. Now, the benefit of a Parent Plus loan is that no matter what your credit is, as long as you qualify, you get the same rate. And so for some people, that ends up being a good option. And for other people, it ends up being more expensive than what they could qualify for in the private market. And so really the thing to remember here is it almost always makes sense to use the Stafford loan first. And then if you need more money after that, it can make sense to compare what the cost is to use a Parent Plus loan versus what you might qualify for in the private market. And if you are researching what private market options are available to you, once you're done shopping around, I would just ask you to check Juno at the end and see if either we already have lower rates for you, or if we can just match the lowest thing that you've found and provide you with some cash back on top.
And I put the link in the chat. It's absolutely free just to create the account. And it's free to kind of check out if they can find you a better rate or not. Okay, how about Norlin? Do you want to unmute yourself and ask your question?
Hi, can you hear me?
Yes.
All right. Thank you so much for all your help with all this. You guys have been very informative for all these stressed out parents.
Yeah.
I think our question is 2 parts. So the first one is, my husband took out a private loan last year with my daughter as a co-signer. And we just recently got the bill like last week, and so we're applying for the loan tonight and realized the rates went up, of course, like everywhere else. So is it okay for us to go ahead and shop around? I know you're very helpful about Juno, and I don't know how that would affect the credit check. We didn't want it to be like, a big ding in our credit check or anything like that. So is it okay just to do, is there like a window of days that we can check for other private lenders where it can harm our credit check or our credit ratings?
Yeah, no, this is a fantastic question, and one of the most common ones that we get. So absolutely, you can shop around for this. 2 points I want to make. One, there's a lot of places now where you can check what rates you might be eligible for without doing a hard pull on your credit. Now, those aren't going to be final rates, but it'll give you some indication that's close to what you'd get once you submit a full application and do a hard credit check. But to directly answer your question, Experian's own website says that if you are shopping around for loans in the same category over a 45-day window, they won't penalize you for doing more than one hard credit check. So if you're doing a hard credit check with a full application to check your rates on 3 different lenders over the next week, it won't impact you more than having done that first credit check.
All right, that makes sense. Thank you.
Sure.
All right. Okay, and then the other part of that, because you did talk about the Parent Plus loan, what was the rate? What was the question?
What are the payment terms and all that stuff?
Are the payment terms different with a Parent Plus loan than it would be for like a private loan?
They can be. So with a Parent Plus loan, there's 2 options for repayment. The 2 typical options are either you start making immediate repayments, which start roughly 60 days after the money is sent to the school, or you can delay making any payments or defer making payments until 6 months after the student graduates. And you have to make a selection on which of those 2 you want in that process of signing that master promissory note that says, I want a Parent Plus loan. And then on private loans, you typically have 4 repayment options that you can choose from. I'd say furthest out you can push payments is up to 9 months after graduation with 2 lenders on the market, one of them being the lender that you can find on Juno's site. And then the other 3 options are just like with Parent Plus, there's immediate repayment, which means you're making full payments effectively immediately. You can choose interest only, which means as it sounds, you're just paying off the interest every month so that when the student graduates, the balance is equal to the amount you borrowed on day 1. Or the final option, which is relatively common, is something called minimum payment. And it's, depending on the lender, either $25 a month or $50 a month that you pay while the student is in school until 6 to 9 months after they graduate. And the reason a lot of people choose that is at this point, effectively every private lender has something called an auto pay discount, which is a 0.25% reduction in the interest rate that you're being charged once you connect a bank account to your loan balance and start making direct payments. And so a lot of people will choose this minimum payment option because it lets them start getting that 0.25% discount immediately, as opposed to waiting until if you choose the deferred option, you would be charged a slightly higher amount until you start making payments after they graduate, and then can become eligible for that discount.
Oh, thank you so much. That was so helpful. And
Sure.
the Parent the Parent Plus loan, does it have a prepayment penalty? I know some of, okay, good, so that's fine. All right, those are all my questions. Thank you again so much.
Sure thing.
Okay, Chris, there's a question in the chat I'm going to read. If a private loan is applied for, usually how long does it take to get fully approved? And does the college get the funds? I think we've answered that part. The college gets the funds, but, and then are there certain companies to go through that process faster than others?
So it's a good question. When you apply for a private loan, let's say you've submitted a full application, the typical time for it to either get approved or denied is anywhere from, I'd say, 0 to 3, maybe 4 days. There are some cases where things can take longer. And that typically is if a parent is retired and doesn't have a W-2 and perhaps has to provide some other documentation to prove assets or income. In most cases, just I think it's fair to assume that that approval stage will take 3 days or less. Once that happens, the next step is you see the final rates that you've been approved for, and then you decide whether you want to move forward with those or not. You have 30 days after you're approved to decide whether you want to accept those rates. If you do, that's called signing the loan, which is a digital signature. And so once you effectively sign that loan, what happens is the lender, then you effectively the ball is out of your court. The lender will contact the school and they'll simply ask, this is called the certification stage. Is your child a student at this school? Is the amount that you're asking to borrow less than or equal to that cost of attendance number that makes up tuition plus living expenses? The school will say yes, and then they'll tell the lender what day to send the money to the lender. Hopefully that helps.
There's another question from this person about, can you inquire about rates from several lenders without it having impacting your credit score?
So you can get preliminary rates. So using a soft check on, at this point, most lenders' websites. Those aren't going to be final rates. And you can either go to each lender's website directly and create a profile and do a soft rate check. Or you could go to a site called credible.com, that's CREDIBLE, and create an account, and they can do a soft check to give you a view of what you might be eligible for across, I believe it's somewhere between 6 or 8 lenders, depending on what state you're in. It won't have all lenders on it, but that might be one of the quickest ways that you can get some sense for what might be available to you.
Okay, one other question from the chat, and then I'll go back to the people with their hands raised. When does a student need to start paying back the $5,500 federal unsubsidized loan, or even subsidized loan that they might be taking out?
So typically 6 months after graduation. There's a little bit of a wrinkle in that, there are currently some student loan repayment plans for that Stafford loan that a student can opt into. There's a little bit of, I'd say, confusion with what's going to happen with these plans due to certain court cases. But one of the repayment plans is called SAVE, S-A-V-E. And if your student doesn't have a job 6 months after they graduate and they're enrolled in the SAVE plan, then they still would not have to make any payments until they start earning income, and only until that income exceeds a certain amount. There's a formula for it that I'd be happy to walk anybody through. The standard is it would be 6 months after graduation, and as long as this plan continues to exist, then they'd have, I'd say, even more protection beyond that for a longer period of time.
Okay,
real
go
quick,
ahead.
sorry, that's my question. I always thought like unsubsidized means that you have to kind of pay it while you're in school, and subsidize is after you get out of school. Do I have it wrong with those terms?
Maybe the way that to think of it is, with either of the loans, subsidized or unsubsidized, you don't have to pay any money towards those loans until after graduation. The only difference is that with the subsidized loan, you are not accruing interest until after graduation. In effect, the government is paying the interest on the subsidized portion of the loan so that the amount that you borrow is the same amount that you owe after graduation. Whereas the unsubsidized loan, it just continues to accrue interest this year at a 6.53% rate until after you graduate.
So the term subsidized versus unsubsidized has more to do with, are you accruing interest while you're in college or not?
Okay. And do you have to apply for that deferment for after graduation for both the unsubsidized and the Parent Plus? Do you have to apply for the deferment for after graduation, or is it just automatic?
You don't have to for the Stafford loan. So that subsidized or unsubsidized, that's automatic. For Parent Plus, there's a selection that you can make in your when you're accepting a Parent Plus loan. And so I would just go back and double check. Sometimes people accidentally click the wrong thing. Just make sure that whatever selection you've made is for the repayment type that you want.
And then for the Parent Plus, if you have good credit, that's what you were talking about with the Juno, right? Like if you have good credit, then yeah, you might look at the Parent Plus as 10%, but the other private loans might be a little lower. And then after we after we look at other loans, then we go to Juno. Is that what you're saying? After we look at other loans, then we go to Juno?
Correct. I think that's the way that I would think about it. You can.
Well, it's not just look, right? I mean, you need to have applied and gotten an interest rate from another lender.
Yeah, we did. We applied and we got like a 12%. What? Oh, 10%, 12%. We got different percentages, which are kind of almost like the Parent Plus. So we're kind of like, do we get the Parent Plus or do we get a private? Because it's kind of almost the same.
At that level, I would certainly take the Parent Plus. I'd say perhaps maybe check what you'd be eligible for on Juno. I think Debbie's posted the link in here as well. And candidly, if I was not getting a rate that's at least like 0.5% below Parent Plus and probably more, then I would use Parent Plus. But that's up to each person.
Okay, thank you so much.
Sure thing.
Well,
Can I just ask for one quick clarity on the last thing you were talking about with the subsidized, unsubsidized loans?
Yes.
Yeah.
Can you just clarify on the unsubsidized loans, the interest accrues obviously when they're still in school, but does it not capitalize until the 6-month grace period?
Correct.
Okay.
Exactly.
So you would want to pay it before that, obviously, to help avoid it from kind of snowballing on top of itself, right?
Yes.
That would be the most helpful. Now,
okay.
There's one caveat to this, which is, again, this save plan. We don't know if it's going to continue to exist, but if it does, once someone is enrolled in that save plan and they're making the required payment under it, which could even be zero, you under the plan structure, you wouldn't continue accruing incremental interest. And so there's a calculator that we have on our site, and there's a bunch that you can find in other places as well. But it might not even make sense to pay the accumulated interest on the unsubsidized loan if the student is enrolling in SAVE and might effectively just have their loan be further not have to accrue any more interest over the next couple of years.
Understood. Okay, thank you. And one last thing, I also did use Juno a year ago, and I had a great experience with it. So thank you.
Thank you very much. Appreciate it.
So there's another question just related to payments, prepayments. Let's see, sorry, I'm scrolling back. Here it is. Okay, or payback options. So this person said, I read payback options of loan deferments, and there is one to defer until after school. You can pay a fixed amount of $25 a month, and that payment goes directly to the interest of the loan. They're saying I would be the co-signer for my son and I have good credit. I'm asking if she's basically asking, should she defer all payments till after her son graduates or start paying the $25 a month while the student is in school? And does any of those, do either of those payback options, will they impact her credit?
So my recommendation would typically be to go with the $25 monthly payment if you're able to afford it and while the student is in school. Main reason being that there's two benefits to it actually. So private lenders will, when we're saying that you have 4 prepayment options to choose from, typically the lowest rates for a given term length. So let's just assume that we're looking at a 10-year repayment period. The lowest rate is typically associated with you paying the money back sooner because there's less risk associated with that for the lender. And so the immediate repayments, typically the lowest rate. It's not always like this. The interest only is a little bit higher. The $25 a month payment is a little bit higher. And then if you defer making payments until 6 or 9 months after school, then it's then again a little bit higher. If you choose that $25 a month payment, you're typically going to be offered a slightly lower rate than what you would get if you defer payments. And then on top of that, you'll be able to, if you enroll that in auto pay, get another 0.25% discount applied the moment that auto pay is enabled. And so I hope that answers the question. I might have missed the second part.
No, thank you. I'm the one actually who posted that in the chat. I was just curious as to if you guys have experienced the better option for somebody who most likely can get a lower rate because of higher, a higher FICO score. So if I was just wondering if it's beneficial to start the fixed payments early instead of deferring till later, because the chances of me getting a lower rate are greater that way and lessening the interest.
If you have, let's say, the excess income to pay off the immediate, to choose the immediate repayment plan, and you feel really comfortable with that, then that is typically going to be the lowest cost.
Yeah, it will. I mean, again, as Chris is saying, if you can do that, you are just lowering the total cost of that whole loan. So
right, okay.
And then is there
a prepayment penalty after school if we decide to pay it off entirely after school? How does that interest work on that then? There's an interest payoff amount?
Exactly. So from the moment the money is dispersed to the school, sent to the school, you'll start accumulating some interest balance. So exactly as you stated, there's accumulated interest that you'd have to pay off plus the principal balance, but there's no penalty on top of that. Now, the one thing I do sometimes see people do today is in the rate environment today in general is pretty volatile. For anybody who's been following it, especially in the last 2 weeks. The result of that actually has been that sometimes the difference in rate that you'd be charged for an immediate repayment versus, let's say, a minimum payment might be very, very small or almost even close to being the same. And in those cases, one of the ways to think about it is if you choose an immediate repayment today, that's exactly what you have to pay each month. If you choose,
that would be principal and interest.
Principal and interest, correct. But if the rate that you're being offered for a $25 monthly payment that then has principal and interest kick in, let's say 9 months after school, is very similar to what you're offered for an immediate repayment, there's nothing preventing you from paying it off the same as you would an immediate repayment loan today. You can make much higher payments today and pay off that loan in the same time frame as an immediate repayment, but you have the flexibility in case, let's say, something happens or you decide for some period of time that you want to make lower payments to do so. And so if I would just think of it as that incremental amount that you're being the higher interest rate associated with the different repayment plan is just kind of like an insurance policy that you're paying for to give you added flexibility. And if it's a very small insurance amount, it might be worth it.
Okay, and if at any time, so is this set it and forget it if we choose the, say, fixed amount program? If we decide not to do those minimum payments anymore and want to cease at that moment and then just, you know, defer the rest till after college, is that an option, or is it set it and forget
it? Basically, whatever you select ends up being the minimum that's required monthly. You choose that $25 amount, then for up until 9 months after they graduate, that $25 is what you have to pay. I hope that answers.
I guess what I was saying, if we wanted to stop paying altogether.
No.
Okay,
You
right.
only use the deferred amount in that case. Sorry.
Okay,
Yeah.
got you. Okay, are we able to pay more than the 25 if we wanted to?
Yes.
Okay, so if that's the
But-
minimum.
But you
that's-
can't pay less than what you've chosen.
Right, okay, understood.
Right.
Okay, thank you very much.
Sure thing.
Tammy, did you ask your question? You wanna, if I can't remember if I asked you or not, but if you still here and you want to unmute, you can ask your question. Okay, so while we're waiting, Tammy, if you come back, there is a question here in the chat that says, if I have good credit and my son only qualifies for the unsubsidized loan, does it make sense to shop around for a private loan? He has already, Tammy,
okay.
go ahead. You can go ask your question.
Hi, how are you? Okay. Sorry about that.
That's
all
okay.
right. So I have a question about the Pell Grant. I haven't heard much about that tonight. So on my son's FAFSA account, it says an estimated amount on there, and it says up to, you know, a certain amount. So tuition is due next week. So I need to pay that, of course, as soon as possible. What exactly, really, what is going on? Should I contact financial aid because it says an estimate up to? Should I go ahead and wait and see if it changes in the next couple of days, or what exactly does that mean? I know it's estimate up to, but when should we be receiving the Pell Grant?
Please correct me if I'm off base in any of this, but typically, so the school should have a final amount. And so I would email them and just ask them that question now. But the amount being offered is typically available in your student aid dashboard as well, typically under something called, I believe, Pell Grant LEU. And so I would perhaps log into the student's FAFSA and check that directly. And at the same time, email the school.
Email the school as well.
Yeah, because they should, if it's due next week, they should have what your final amount is, not what an estimated amount.
Yeah, it still says estimate. It's been saying that for quite some time.
Yeah.
Okay. All right.
Okay. Good luck.
Thank you.
So the question I started asking before was somebody is basically, it's a good question. They're saying their son has good credit, and sorry, they have good credit and their son was qualified for the unsubsidized loan. should they be shopping around for a private loan instead of the son taking out the unsubsidized loan?
This is a good question, and part of it comes down to what you think might happen in the future with the federal loans themselves. So if, let's say, if there's no chance that you would benefit from the repayment protections of an unsubsidized loan, let's say there's a huge trust fund and this just might be a way that you're optimizing, then sure, consider using just private loans for the lowest overall cost, and go that way. If there is some chance that the student may not get help in paying back, let's say, those Stafford loans they take out, and they might end up needing some of the protections offered in case they don't make as much as they anticipate they would, or let's say are unemployed for some extended duration of time, then the Stafford loan does still offer pretty good rates. 6.53% is on the lower end of anything you'd find on the private market anyway.
Okay. There's a question here from Laura. Laura, I don't know if you're still on the Zoom, and you just asked, is there any advice for divorced parents? So I probably need a little bit more information, like about like what type of advice you're looking for related to divorced parents, or if you have a particular situation, but there might be something that we could help with divorced parents, but we probably just need a little bit more specific question. Here's an interesting question, Chris. If the parent took out a Parent Plus loan for a year, can they shop around for a private loan and use that to pay off the Parent Plus loan?
Theoretically, yes. So there's no prepayment penalty on Parent Plus. If you don't need, let's maybe use an example here. You borrowed $1,000 Parent Plus loan year one, you borrow a $1,000 private loan in year two, and you use it to pay off the Parent Plus loan, you still need to find a way to pay the school for that year. And so if, let's say, you do have extra ability to pay out of pocket for this current year, you could use your loan eligibility to borrow something and pay off perhaps a more expensive loan that you've taken out in the previous year.
So it's an interesting question. You can do it, but you still have to find a way to pay for the current school year.
But this is a fantastic question, because if you really think about it, rates today are the highest they've been in over a decade. And so if anybody is in, let's say, the fortunate position of next year,
right,
being able to pay some out of pocket, then it could absolutely make sense at that point to borrow money at a lower rate to pay off any higher interest rate loans that you take out today.
So there's a question. My child's college said we should look for private loans through Elm Select. I'm assuming that since I had to put in the college name, the school gets some sort of kickback for directing us to that site. Is there any real benefit using the suggestion of Elm Select? Do you want to maybe explain who Elm Select is for anybody else?
So Elm Select is basically it's a tool that a bunch of private lenders built together. Most schools, or many schools, link out to Elm Select when telling you what your private student loan options might look like. The schools do not get paid by the lenders, but Elm Select is, in my opinion, not a very great tool. And a few reasons why. Number one, it doesn't show you what rates you actually might get. It just shows you a list of lenders that are, in many cases, less exhaustive than if you went to search for them on your own. And two, sometimes it lists outdated lenders. There are Discover Student Loans no longer provides student loans. It's still shown on a lot of schools' lender lists. And so Elm Select is really just, for some regulatory reasons, it's one of the only lists that schools are allowed to show to people. But it's far from perfect, and you'd benefit from looking outside of the lenders that are listed there, because many are not.
But good question. And good consumerism that you're questioning who Elm Select is. So Hootie, I know that you also raised your hand, but I'm reading your question here. I don't know if it's the same or not, but do you want to unmute yourself and ask your question?
Yeah, it's the same question. I was just wondering if that, what I wrote, I just copied and pasted from the letter, looked like something went through. I guess I could find it. I don't know.
So Chris, do you see it? So basically Hootie's saying that it sounds like you did get confirmation that that the promissory note was completed. The thing that I'm a little concerned about is because you are first-time borrowers, you have to make sure you do go through the entrance counseling. Have you done that?
We did do that, yeah.
Okay.
Okay, then you should be set.
Yeah, Hootie, I'd say there's a very high chance that you're completely set. It will not hurt to just email the financial aid office to confirm that you're set to receive Parent Plus funds to pay for the upcoming term, though. If there's anything is wrong, they'll let you know pretty quickly. They
wouldn't like, they just wouldn't do anything. They're just like, until after orientation. So I mean, you know, but hopefully it works out. Thank you guys.
Sure.
No problem. So here's another question from Kat. My daughter is going in as a freshman because her college credits from dual enrollment will not transfer till October. How does that affect loans and money she's able to borrow this year, or will it affect next year? So I'm assuming, Kat, you're asking the question about when your daughter's credits come through from dual enrollment, how will that affect any money that you can borrow either this year or next year?
Yes, because she's going in as a freshman, but she already has several associate degrees. So I believe that will make her like a junior after credits.
After they transfer.
Yeah.
Can I ask, do you know if your daughter used the Stafford loans to pay for the associate's degrees?
No, she was dual enrolled in high school. Okay. So we didn't use any loans for that. It was like covered by the high school and we just paid for books.
Got it. So typically, and I'm going to double check this just to make sure that I'm right. The way the Stafford loan eligibility, so the one thing that's impacted by this, the only thing that I can think of, is the amount of Stafford loans that she'd be eligible to take out each year. And so if she'd be considered a first-year student, that cap would be $5,500, and it would be higher if she's considered a second or a third or a fourth-year student. I do believe with a pretty high degree of confidence, though, that she'd be considered a first-year student in this scenario, and so I don't think that would impact the amount that she's allowed to borrow through the Stafford loan, and it wouldn't impact anything with relation to Parent Plus or private loans.
Okay, that sounds like what I was thinking as well, because I think then it'll affect her next year, as if she's officially a junior, then the amount of Stafford loans that she's able to apply for will be higher. Is that correct? Like not just a 1,000 jump, but it'll be like the 2,000 jump or whatnot.
This is a novel question for me, and it's a
okay.
really good one. I still have a hunch that it's not based on the status of basically whether you're a freshman or a junior, but actually based on which year of attendance at college.
I'm not 100% sure about that. So, but maybe we can double check.
Either double check.
Yeah.
Okay, thank you.
Sure.
Allison's asking a question. Do you have to keep using the same private lender each school year?
Great question. No, you can switch to any other private lender, and you can also switch back and forth between Parent Plus and private lenders from one year to the next. You can even split the loan amount that you're borrowing as, let's say, part federal and part private within the same year.
And then I think this is our last question. Can you talk about how repayment on the Stafford loan works year over year? Meaning year one is 5,500, year two is 6,500. What does the repayment on those annual amounts look like? And are they combined or is it continued to be separate?
This is a great question. So by default, each loan you've taken out is independent. So each one would have a repayment amount that you have to send after graduation. But there's ways you can either, using federal loan programs, you can consolidate it all into one larger loan and have one payment to make, or you can do something called student loan refinancing, which is like refinancing a home, but a little bit simpler, where let's say once a student has graduated, if they then have a job and have a good enough credit score, they may be eligible to refinance all of their existing loans to a lower rate or a different term. And whether it makes sense to do that will depend heavily on if they're going for any kind of loan forgiveness through public service, then don't refinance. And if the interest rate environment is favorable when they graduate, such that they'll qualify for something that's better than what they already have.
Okay, so we have one raised hand and one more quick question. Let me go to the chat question, then we'll go to the person who has a live question. The chat question is, how much exactly does one get from the 5,500 because it's minus the fee? So I don't know the exact amount, but maybe you want to just describe, Chris, the fact that like the full 5,500 or even whatever the full Parent Plus amount is that you take out doesn't get applied to your bill.
Yeah, this is a really good question. So the way the origination fee works for federal loans is, let's use an example. For the Stafford loan, it's 1.057%. It's a weird specific number. Congress came up with it. Of course, it doesn't make sense.
Mm-hmm.
If you borrowed, let's say, $1,000 through the Stafford loan, then you would only get roughly 98.94% of that sent to the school. So you borrow $1,000, about $9,894 gets sent to whatever school is supposed to receive that money. And so where that makes a much bigger difference is when we think about Parent Plus, because that origination fee is now 4.22%. And so if you wanted to pay, let's say, $10,000 in tuition to UCLA, you would actually have to borrow a little bit over $10,400 in order for UCLA to receive $10,000 from you and apply that towards your bill.
So I just did the quick math of the 5,500, really $5,413 gets applied to your bill.
Yeah.
Okay. Diego, do you want to unmute yourself and ask the question?
Yes, so the second question that I had was that in my case, in my financial aid award package, there were several loans that I accepted. But on my tuition statement, I have a credit and I didn't need to set up a payment plan for my tuition. Does that mean that do I owe the federal government any money in loans, or what does that situation mean for me regarding the loans that I accept?
This would be difficult to answer. I don't think there's a general answer I can provide because it depends on what your tuition, what the statement on that dashboard is accounted for. Sometimes when a credit is shown, it might include expected loan amounts to be taken out. And so if you want to just maybe email me directly, I'll drop my email on here right now. I'm happy to maybe just take a look at it with you and make sure I can fully understand how they're getting to that credit and how it would impact your broader question, if that's helpful.
Absolutely. Well, thank you for helping me answer that question and for offering to leave the email. And absolutely, I will email that to you so we can take a closer look at it.
Perfect.
Thank you.
Sure thing.
Okay. Well, another question, are there private loans that protect you in the event of student and parent death or disability?
Very good
Good question.
And it differs a little bit from one lender to the next and sometimes from one year to the next. But short answer is yes. The level of protection varies significantly. Many lenders will discharge a loan in the event that the primary borrower, meaning the student, faces death or a permanent disability. Say most will not if the cosigner does. But that's probably one of the better questions to ask each lender as you go through that process.
And just to add to that, if the parent passes away and the parent took out a Parent Plus loan, then that loan is discharged. So, in unfortunate situations where a parent knows that they might have a terminal illness, sometimes they purposely take out a Parent Plus loan. Okay, well, Chris, thank you for all your expertise.
Thank you, Debbie. Thank you, everybody, for being here.
Hopefully this was helpful. And I'll put in the chat again, and everybody will get a follow-up email with a link to this recording. But if you're considering private loans, definitely create an account at Juno and see how they can compare, if they can get you a better rate than any of the private lenders that you might have already gotten rates from. Okay, good luck, everyone. Getting close to, these due dates and to move-in time. So, if there's any additional question, Chris, you put your email in there, and the Juno team in general is very helpful. If you've got questions that arise over the next few weeks, you can reach out to them.
Yeah, and it doesn't have to be a question about private loans. It doesn't matter. Any question you have, whether it's about federal loans or anything relating to paying for college, please feel free to message us and we'll make sure to help.
Okay, good night, everyone.
Thank you very much.
Thanks, guys.
Bye.